While the U.S. stock market is currently closed, as of the closing bell on Friday, September 19, 2025, at 4 p.m. Eastern Time, BigBear.ai Holdings Inc., trading under the ticker symbol BBai, closed at a price of $6.85. This represented a significant intraday gain of 9.08%, a surge that has turned heads and placed the company squarely back on the radar of momentum traders and AI enthusiasts alike. But while the single-day pop is what grabs the headlines, the real story here isn't about one day of green on the screen. The expectation is that BigBear.ai is just another speculative, high-beta name riding the coattails of the broader artificial intelligence frenzy, a smaller, less proven entity destined to be tossed about by the whims of market sentiment. The reality, however, is a far more complex picture of a company at a critical inflection point, wrestling with the immense pressure of government contract dependency while sitting on a war chest of cash that could fuel its next chapter or become its biggest liability. The recent price action is not a simple reaction to AI hype. It's the market recalibrating its assessment of a deeply polarized investment. Many investors, particularly those managing their portfolios through platforms like Schwab Intelligent Portfolios or Fidelity, look at a stock like BBai and see a familiar pattern. A massive run-up over the past year, fueled by the narrative surrounding AI, followed by intense volatility. The common belief is that the company's fortunes are inextricably linked to the broader AI sector's tide, making it a proxy bet on the industry's continued expansion. This view is reinforced by the stock's wild swings, which seem to defy fundamental analysis, often rocketing or plunging on no discernible news. This has led many to categorize BBai as a trading vehicle rather than a long-term investment, a stock to be handled with the nimbleness offered by platforms like Robinhood or Interactive Brokers, where quick entries and exits are paramount. The expectation is that you ride the wave of positive sentiment amplified by names like NVIDIA and get out before the inevitable correction. But to truly understand the dynamics at play with BigBear.ai, one must challenge this surface-level interpretation. The reality is that BBai's recent surge is less about the generative AI hype that powers giants like NVIDIA and more about a granular and, frankly, more precarious business model, centered on providing decision support solutions to the U.S. government, particularly the defense and intelligence communities. This isn't a story of creating the next large language model. It's a narrative of securing multi-year high-value government contracts. The recent volatility and subsequent rally are directly tied to the market's struggle to price in the lumpy, unpredictable nature of these contracts. The disappointing second quarter results, where revenue declined 18% year-over-year, and the subsequent downward revision of full-year guidance spooked the market and sent the stock tumbling. That was the reality check. The recent recovery, however, is the market beginning to look past those near-term headwinds and focus on the company's massive $380 million backlog and, more importantly, its staggering cash position of nearly $391 million. This isn't just a small-cap AI company. It's a cash-rich entity with deep government ties, creating a fascinating tension between its current operational struggles and its future potential. The daily trading action in BBai has been a spectacle of this conflict. In the sessions leading up to its recent multi-day run, trading volumes were immense, far exceeding the 30-day average. This indicates a significant influx of both retail and institutional interest. The stock moved between $628 and $694 in its final trading session, a nearly 11% range that speaks to the intense debate happening in the market. While short-term traders on platforms like SoFi Invest might be playing the momentum, a deeper look at the institutional holdings reveals a more complex story. Major players like Vanguard and BlackRock have significantly increased their positions, suggesting they see a long-term value proposition that transcends the daily noise. These institutions are not momentum traders. Their buying activity indicates a belief that the market is mispricing the company's long-term prospects, particularly its ability to convert its substantial backlog into recurring revenue streams. This institutional accumulation, happening amidst retail fervor, is a critical piece of the puzzle that often gets overlooked. The expectation is that this is a retail-driven meme stock, but the reality is that smart money is quietly building positions, betting on a turnaround that the market has yet to fully price in. What exactly does BigBear.ai do? At its core, the company provides AI-powered analytics and decision support solutions. Think of it as a firm that helps large, complex organizations, primarily government agencies, make sense of vast amounts of data to make better, faster decisions. Their work spans national security, supply chain management, and logistics. This isn't the glamorous consumer-facing AI of a Tesla with its autopilot, or the ubiquitous AI of an Apple iPhone. This is the nitty-gritty, mission-critical AI that operates behind the scenes. The business model is heavily reliant on securing large, often multi-year contracts. This leads to a lumpy revenue profile, as evidenced by their recent earnings report, where delays in certain Army programs caused a significant revenue shortfall. The company's past performance has been a roller coaster. After a period of post-SPAC decline, the stock caught fire in the AI boom of the last year, soaring over 200%. However, the recent earnings miss served as a stark reminder of the inherent risks in its business model. This brings us to the future outlook, where the expectation versus reality framework is most pronounced. The expectation is that the AI tide will lift all boats, and as the government continues to increase its spending on AI and defense technology, BBai will be a natural beneficiary. The reality is that the company faces intense competition from established giants like Palantir Technologies, a company with a much stronger track record of converting government contracts into consistent revenue growth. While BBai has a substantial backlog, a concerningly small portion, just over 4%, is currently funded. This means that while the potential for future revenue is there, its realization is far from certain and subject to the lengthy and often opaque government appropriations process. The company's future hinges on its ability to not only win new contracts, but also to accelerate the conversion of its existing backlog into funded mandates. Furthermore, the company is not yet profitable, and analysts have been widening their loss per share estimates for the coming year. The risk is that the company's cash pile will be depleted before it can achieve sustainable profitability. Comment below with your thoughts. Do you believe BBai can effectively compete with established players like Palantir for major government AI contracts in the long run? However, the bull case for BBai is not without merit, and it is here that reality could exceed expectations. The company's massive cash position provides it with a significant strategic advantage. It has the firepower to make strategic acquisitions to bolster its technology stack and expand its commercial footprint, reducing its reliance on government contracts. There are also powerful secular tailwinds at play. The U.S. government is in the early innings of a massive technological overhaul, with AI being a central component. Legislation has already allocated billions for border technology and AI-driven defense systems, areas where BBai has expertise. A key catalyst to watch will be the company's ability to land a significant commercial contract, which would signal to the market that it can diversify its revenue base. Another potential positive is its recent launch of an enhanced passenger processing system at Nashville International Airport, a foray into the commercial sector that, if successful, could be a template for future growth. An investment in BBai through an individual brokerage account is a bet that management can successfully navigate the transition from a pure-play government contractor to a more diversified AI solutions provider. In summary, the narrative surrounding BigBear.ai Holdings Inc. is a classic tale of expectation versus reality. The market's initial expectation was that of a small, speculative AI play, a stock to be traded on sentiment rather than fundamentals. The reality is a far more nuanced story of a company with deep government ties, a formidable cash position, and a business model fraught with both immense opportunity and significant risk. The recent price surge is not just a product of AI hype. It is the market grappling with these competing narratives.
While the challenges of government contract dependency and intense competition are real, the potential for a strategic pivot, fueled by its cash reserves and favorable legislative tailwinds, cannot be ignored. The path forward for BBai will be volatile, but for investors who can look beyond the daily fluctuations and understand the deeper strategic tensions at play, it represents a compelling, if high-risk, opportunity in the evolving landscape of artificial intelligence. The key will be execution, and the market will be watching intently to see if the reality of BBai's future can ultimately live up to the immense expectations